If you just take a look at how the private sector data, jobs ADP showed, there was an addition of about 4,97,000 jobs in the month of June. The growth has managed to exceed the estimates, that of 2,20,000. That sort of spurred worries about Fed's next steps. The US macro cues, the Labor Department is going to be releasing the June payrolls data today. The official data is likely to cool off to about 2.40. And across the screen that you're seeing right now, both in the pre-market US, the pre-market futures are not really indicating such a gap down, but Asia is bleeding. Across the board, you are seeing 0.5% to about 1.5% kind of cuts coming in. For our markets, we don't seem to be taking it off at all from the global weakness, because even yesterday, when Europe kick-started trade, or for that matter, how Asia panned out, it wasn't the best of shapes, but our markets continue to be in a momentum of their own, and we've already welcomed 19,500.
Yeah, so Ayesha, you look at the global setup. I mean, there is a bit of a step back for the bulls, and frankly, it's visible because the problem with with the US market has been that you've seen this one-sided move in technology stocks, and you've seen a one-sided positioning in terms of where the market global markets would be and where inflation is headed. All the constructs gradually are getting challenged. Interest rates have not peaked out for US markets. Inflation worry is clearly not behind us. And see, there is a question mark which is now being asked in terms of what the AI-dominated stocks and themes could be do. So the question is, are we likely to shrug off global cues? Can we maintain our own can we really chart our own course, given that the internals, the momentum, and the big picture argument for India, I guess, is very, very different. We'll talk about it. But if you frankly ask me, now is the real test, because what we've seen in April to June and April to July, I guess, is a function of Indian markets outperforming, but the push also was coming from global markets. If global markets they retreat, can we continue that chart of outperformance? You will outperform, but will you outperform the fall? Or will you fall and you will fall less? Or you will not fall at all? These are the three questions.
We're just looking at the market positioning as well, and I'm looking across sectors, be it autos, be it banks, be it capital goods, barring, I think, consumption, which is a neutral, or IT, which is an underweight. Across sector, ahead of the Q1 numbers, the positioning seems to be extremely bullish. And that may not be such a good thing right now in this kind of a market.
That's the problem.
Yeah.
I mean, you're looking at data in the morning, and let's look at that positioning. This is the point I just want to bring out. I mean, if you're a trader, if you're an investor, what is that you need to focus on? We'll talk about the Nifty part in a second right now, but let's look at the positioning of the market. And the positioning of the market is following. Auto, extremely overweight. Banks, overweight positioning. Capital goods, overweight positioning. The outlook there is bullish. IT is the only sector where market positioning is underweight, outlook is bearish. Consumer, I would say, it was neutral, and it is neutral in terms of outlook because it's going to be in divided sector. Now that's the problem for this market. Now, you can argue and say that 19,500 on the Nifty, FI buying it continues, but for markets to keep on going higher, you need a trigger. That trigger either has to come in this continuous dose of liquidity, which could happen. It has to come in terms of a macro change or a trigger, which is unlikely in the month of July, or it really has to come from earnings season. The problem with this earnings season is that everyone is on the same side of the boat. And the risk for this market is that earnings season is slightly better. If you are in for no big upgrades, you are in for more downgrades, then the market actually would see sell-off. So in the near term, the numbers, earnings season has to be strong. Companies have to not only meet expectations, they have to beat expectations, and the positioning of the market is such that a little bit of miss here and there, sector, let's say in autos, positioning is extremely overweight. Bank, outlook is bullish, positioning is overweight. Capital goods, outlook is bullish, positioning is overweight. With the exception of IT, that's a challenge for the market. Yeah. Now, what do you do in this market? That is very different than what the positioning is. Look, in this market now, if you are long Nifty, you don't sell the Nifty. And you don't short sell, please. You don't short sell at all. Yeah. If you are,
at best, you do nothing.
You do nothing. Yeah. Sometimes in the market, you have to go through the phase of just sit tight. If you're enjoying, make hay while the sun shines, enjoy the positioning. And if you're on the long side, just don't do anything. I think it's time to get not choosy, but time to get very, very choosy in terms of buying mid and small cap stocks, because there is a froth happening there. So if I can use the word lazy and choosy, large cap stocks become lazy, mid cap stocks become choosy. Yeah.
Okay, that's the mantra, lazy and choosy. And just going by the kind of trade setup we witnessed as well, Nikunj, you were talking about liquidity, at least for the past few trading sessions. The FII flows have been intact. That has been on our side. 7 straight days on the trot. DIIs as well have continued buying. The broader markets as well are holding quite well. And as we said yesterday as well, we did have that tryst with the 19,500 mark. But let's also discuss the kind of action as well that we've seen within the primary markets and understand that because it has been fairly active as well. We've seen quite a bit of participation coming in. You've also got individual stocks that have been in the spotlight. You had the Senco IPO, IdeaForge as well listing in, the listing coming in, and the kind of subscription that they have witnessed as well has been fairly strong.
No, look, it's not strong, it's crazy. Overall subscription 100 times.
Yeah.
See the subscription numbers in a bull market, and given that the whole IPO window is now less than 7 days, obviously it's going to be very strong. Why? Because you pretty much know that, see, if it's a 20-day window, markets price, the promoters and merchant bankers, they price the IPO based on the current market scenario. But a lot changes between 15 to 20 days. So that's the risk which nobody wanted to take earlier. But right now the window is curtailed to less than 7 days. And SEBI is talking about 3 days now, which automatically means that the market risk to some of the IPOs is not there. The valuation risk and the macro risk is not there. But since you're in a bull market, an IPO market is a market where you know that if you get shares, you can sell higher. And if you don't get shares, there is no downside. There's always a crazy amount of subscription which is there in some of the niche companies. Let's look at IdeaForge. It's a great company. The promoter, very smart promoters. They're doing a business which I think is a high growth business. But my problem is that just look at the valuations. While everything on the matrix I think is going to look strong, but look at the valuations. The revenue for FY23 was 186 crore and the PAT was 32 crores. In front of that, you're looking at a market cap which is about 5,000 crore. So for a profit of 32 crore, even if it doubles in next 3 years, we are paying what, a valuation of almost 5,000 crores. My limited point is that there is just no money left on the table now, and but that's the bull market.
Yeah, IdeaForge 28 times in terms of the 12-month PE is what we're seeing, and in comparison to some of the other players as well, it does stack up as a fairly expensive valuation. But yeah. Anchor investors, the likes of Nomura, Goldman, Tata AIG, and the overall subscription, as Nikunj said, has been quite mind-boggling. Okay, let's discuss market levels. We've got our chartists waiting